What if I told you that some of the most powerful opportunities in the market today aren't the headline-grabbing megacap tech names, but the companies quietly reshaping industries right under our noses? While most investors chase hype, the real winners are being built in mobility, cybersecurity, and enterprise AI, and they're already scaling at a level that's almost impossible to ignore. These aren't speculative plays. These are profitable, growing, and expanding businesses that are carving out dominant positions in trillion-dollar markets. And in this video, we're going to break down 3 stocks that could define the future of transportation, digital security, and AI-driven enterprise software. Stay tuned, because by the end, you'll see why these names might just be some of the smartest long-term bets on Wall Street today. First on the list is Uber Technologies Incorporated. Uber has transformed from a disruptive startup into a global leader in both ride-sharing and food delivery. The story today is about scale, profitability, and future expansion. After years of heavy losses, Uber has crossed a major milestone, sustained profitability, while continuing to grow revenue at a double-digit pace. In Q2 2025 alone, Uber's active users climbed to 180 million, with more than 3.2 billion trips completed, driving a 17% surge in gross bookings. That kind of growth at scale is rare in tech and shows the durability of its business model. What makes Uber especially compelling is its dual-engine strategy. The core mobility segment remains the backbone, expanding as urban populations shift away from car ownership. At the same time, Uber Eats has become a powerhouse in food delivery, growing even faster than ride-sharing and capturing over 22% global market share. Together, these two businesses create powerful network effects, locking in both drivers and customers while opening new monetization avenues like Uber One subscriptions and Journey ads. These innovations turn Uber from a pure transportation play into a platform company with recurring revenue streams and advertising upside. Looking forward, the catalysts are clear. Uber is testing partnerships in autonomous driving, positioning itself not just to compete with, but potentially to integrate self-driving technology. Its freight marketplace, while still a smaller piece, taps into a trillion-dollar logistics market that could unlock new opportunities over the next decade. And with global expansion, particularly in Europe and emerging markets, Uber is still far from saturating its addressable market. In short, Uber is no longer just a ride-sharing app, it's becoming the backbone of modern mobility and digital delivery worldwide. For investors looking at under-the-radar plays beyond the megacap tech giants, Uber represents a rare blend of scale, profitability, and long runway for growth. Next up is Palo Alto Networks Incorporated PANW. If Uber represents the future of global mobility, Palo Alto represents the invisible shield protecting the digital economy. The company operates in a $245 billion cybersecurity market expected to double to $500 billion by 2030, and it has been executing with remarkable consistency. Palo Alto has now delivered 8 straight quarters of beating both revenue and earnings expectations, a streak that underscores how strong demand has become in an AI-driven world where cyber threats escalate daily. In its most recent quarter, Palo Alto reported $2.54 billion in revenue, up 16% year-over-year, with next-generation security ARR jumping 32% to $5.6 billion. That's a staggering figure, reflecting how deeply organizations are embedding Palo Alto's cloud and network security into their operations. Profitability is another standout. Operating margins are strong, cash generation is robust, and its balance sheet is loaded with billions in reserves. This financial strength gives Palo Alto the flexibility to keep innovating and pursuing acquisitions, like its recently announced deal to acquire CyberArk, which strengthens its positioning against rivals such as CrowdStrike and Zscaler. Looking ahead, management has guided for another year of double-digit revenue and earnings growth in 2026, with revenue expected to top $10.5 billion. This aligns perfectly with cybersecurity tailwinds, where AI adoption, cloud migration, and geopolitical tensions are fueling demand for stronger defenses. Yes, Palo Alto trades at a premium, But that premium reflects leadership profitability and outpaced growth. In a time when investors want both growth and resilience, Palo Alto stands out. It's not just riding the cybersecurity wave, it's defining the future of it. For those seeking under-the-radar tech plays with long-term durability, Palo Alto absolutely belongs on the radar. Finally, Salesforce Incorporated CRM. Salesforce has long been the gold standard in customer relationship management software, but today, it's evolving into something much bigger. Its platform is no longer just about sales and service. It's now integrating AI at scale through products like Data Cloud and Agentforce, designed to help enterprises automate workflows and act on customer data in real time. This positions Salesforce at the center of the digital transformation trend, with strong ties to both private sector clients and government agencies. In its latest quarter, Salesforce beat expectations on revenue and earnings, but cautious forward guidance triggered a short-term sell-off. That dip looks more like an opportunity than weakness. Its remaining performance obligations backlog of contracted business continue to grow at 11% year-over-year, and free cash flow remains strong with double-digit growth projected into 2026. While management is conservative in its guidance, history shows Salesforce often outperforms its own outlook, leaving room for upside surprises. The real growth lever is AI. While AI-driven revenue is still small at just 3% of subscription sales, it's expanding at triple-digit rates. Adoption of Data Cloud and Agentforce is accelerating, and while it may take time to materially move the top line, they cement Salesforce as one of the few enterprise software firms with a fully integrated AI ecosystem. Add to that new U.S. government wins, including contracts with the Department of Defense, and Salesforce's addressable market keeps expanding. With the stock trading around 21x forward earnings, it's cheaper than peers like ServiceNow, Workday, or Oracle. Salesforce may not have the hype of the megacap AI names, but its steady backlog, strong cash generation, and AI-driven strategy make it a compelling long-term growth play. So there you have it, 3 companies hiding in plain sight. Uber redefining mobility and food delivery at global scale. Palo Alto Networks, standing guard as the digital shield in an AI-driven world. And Salesforce, quietly embedding AI into the core of enterprise transformation. These aren't hype trades. They're long-term growth stories with real revenue, real profitability, and powerful runway ahead. The question is, are you positioning yourself to ride these waves before the rest of the market wakes up? If you enjoyed this breakdown, make sure to hit that like button, subscribe for more deep dive investing research, and let me know in the comments which of these 3 you think has the biggest upside potential. Because at the end of the day, the market doesn't reward the crowd. It rewards those who see the future before everyone else does.